What's up, family? My name is Brian Rivera, and I'm the managing partner of Trader Tax CPA. So we're a cloud-based CPA firm. And so I get the awesome opportunity of connecting with traders all across the US. I've talked to people everywhere from California to New York, Florida, Wyoming, Kansas. And it's pretty cool to see just how everyone shares the common interest of trading the markets. So it doesn't matter if it's Forex, if it's futures, if it's stock, if it's options, if it's cryptocurrency. I've had the pleasure and the honor of talking to so many diverse traders. But the funny thing is, I get this same exact question is, how do I save in taxes? And so most recently, I had a consultation. So what happens is, the way our firm works is, I open up my calendar and you have the opportunity to book a paid consultation. And from there, we can hash out any tax related issues you may be occurring, or even just brainstorm some strategies on, maybe some of the things that you could do to save from a tax liability perspective. So most recently, I talked to a trader, and obviously his first question, how can I save on taxes, right? So I explained to him, obviously the trader status benefits you get for being an active day trader. I explained mark to market and just some of the things that he should be aware of as an active day trader. So as I was looking at some of his trading habits and some of the products that he was trading, just so happened to notice is that he specifically specialized in ETFs, right? So he was trading things like QQQ, SPY, some of the natural gas and oil and gold type ETFs. And that's where his strategy lied, and that's where he was most comfortable. And right off the bat, I told him, I was like, man, you do realize that, obviously you're in the top tax bracket at 37%, but there are very similar products, what are called Section 1256 contracts, that you can trade the same products, but they enjoy different tax treatment. So what a Section 1256 contract is, it's a tax treatment given to futures and futures options, right? So what I'll do is, in the description below, I'll list a few of the products that I'm referencing, but they actually have different tax treatment than if you traded regular equity or options. And so how that tax treatment works is, the IRS gives you favorable tax treatment. So futures contracts or 1256 contracts are taxed at a blended rate of 60-40. So you get 60% long-term capital gains and you get 40% short-term capital gains. So your blended rate, if you're in the very top tax bracket, your blended rate will be 26.8%. So if you compare that against the top tax bracket just for ordinary income tax rates, you're looking at about 37%, effectively, right? So that's about 11%, 10 to 11% savings mark, right? So if you made $200,000, that's about $20,000 of savings right there. And so if you are an ETF trader, you should consider trading 1256 contracts, just for the simple fact that tax reporting is a little bit easier and you also get that blended tax rate. So when it comes to tax reporting, you report in summary format on Form 6781, and then everything is mark to market, so you don't actually have to worry about wash sales. And they have a pretty cool carryback election, right? So you can actually carry back your losses up to 3 years, and then you can carry them indefinitely forward, right? So just something to think about. And if for you index ETF guys, definitely consider 1256 contracts to help you save on taxes going forward. So if you feel like you learned something and you enjoy the content that we are putting out, feel free to give us a like and subscribe, and we will continue to produce trading content for the trading community. Have a good day.